Welcome to a special edition of Bloomberg Television Markets Uproar. I'm Emily Chang, coming to you live from the San Francisco Bay Area, where I am sheltering in place, all of us at home, in order to comply with local orders that we not leave our homes in the midst of this coronavirus outbreak, in the interest of public safety. Bear with us as we do our best to bring you the news as best we can. First, we have to talk about the markets and the wild swings today. I want to bring in our What'd You Miss co-anchor Romaine Bostick. Romaine, off a huge plunge yesterday, a rebound today. What's driving the turnaround?
Yeah, of course, we had the worst day we saw since 1987 yesterday. Now, we retraced some of those losses today, up about 6%. But here's the thing, Emily, almost all of the buying that you saw, the sustained buying, was primarily in what we would call defensive stocks. So we're talking about utilities, we're talking about real estate, we're talking about consumer staples. Utilities attractive at this stage because a lot of those companies pay dividends. So a lot of the biggest gainers today also happen to have some of the highest dividend yields. Same thing with real estate. When you talk about consumer staples, of course, we're talking about P&G, we're talking about Clorox, we're talking about companies that make a lot of the goods that everyone seems to be out there buying these days, which is pretty much food, cleaning supplies, and other sort of essential staples. The other aspect that we saw, and we saw this from a lot of analysts coming out, basically recommending stocks that they say are good places to quote unquote hide. We heard from Wedbush basically singling out Amazon, singling out Facebook, saying that the work at home movement that we're seeing here, of course, with you being sheltering in place, that's actually going to be a boon to companies that deliver like Amazon, or to Facebook that allows people to connect with one another, things like Zoom video. They're also recommending companies like Walmart. So again, the stocks that are moving higher here are those that stand to benefit, not necessarily from a recovery, but really from the pain that a lot of people are expecting to see in this economy. And really, everyone we spoke to today, Emily, the main word on their lips these days is recession, not if it will happen, but when it will happen and how long it will be.
So, Romaine, let's talk about the volatility. Obviously, we saw a rebound today, but is this going to keep up? More wild swings tomorrow?
The short answer is yes. I mean, by pretty much every market metric out there, the volatility is still elevated. You have a VIX that is trading right now well above 70. That's incredibly unusual for the VIX, which of course tracks the S&P 500 options. Now, you're also seeing other measures in the Treasury market, in the FX market, as well as in the short-term funding market. All of those things are incredibly elevated. If they're not at record highs, they're right near them. The same thing with the oil market. All of the analysts and strategists we've spoken to have basically said that investors should be very wary, specifically around the opening of markets as well as the closing of markets. There are a lot of sort of factors driving this market, Emily, that have nothing to do with fundamentals, nothing to do with how much a company makes or how much a company is worth. These are more technical measures, and until these technical measures start to die down, you really won't have a platform for, I guess, tried and true investors to come back into this market and start trading off of the things that we would normally expect people to trade off of.
Let's talk a little bit about tech, Romaine, because tech felt a lot of pain yesterday. Huge drops. Facebook, Alphabet, Apple. Was the rebound there for them as well?
So the general consensus here is that a lot of the big cap tech companies have two advantages. A lot of them have scale with regards to the control over their markets, the control over their customers. So the idea that even if there is a slump in demand now, that will snap back at some point in the future once we get over the health issues with regards to coronavirus. The other issue with a lot of these companies is most of them have very little debt. If they do have debt, a lot of them are sitting on huge cash piles, whether we're talking about Alphabet or Amazon or Microsoft. So they have a sustainable debt level, they have good brand names, and they have a customer base that is kind of locked in, so that the idea here is that these companies can sort of weather the storm much more than some of the second-tier tech companies, and of course companies in other sectors that don't have a tech-heavy focus. So right now, most analysts, they're pointing to those big cap tech names, they're pointing to some of the healthcare names, and they're pointing to a lot of the consumer staples names as the best places for folks to camp out.
All right, Romaine, thanks so much for breaking it down for us. Romaine Bostick, our anchor of What'd You Miss. Now, the market moves largely driven today by a flurry of activity in Washington. Bloomberg's Laura Davison is there and has the latest for us. Laura, talk about a stimulus package, talk about sending checks to Americans. What's the latest as far as we know?
So it's been a very, very fast-moving day on Capitol Hill at the beginning of the morning. The White House still wanted to do a payroll tax cut as their big central stimulus piece. By about noon today, that had shifted towards stimulus checks going out to every household. That's something that both Republicans and Democrats in Congress have been proposing in recent days. So expect to see that go forward with some bipartisan support. There are questions that still remain on exactly who will get it. Will children be included? Will it just be adults? What size will the checks be? Will that depend on income size? But the administration is looking to move very quickly. They said they wanted to get these out in 2 weeks. That's probably not realistic, just because it probably will take them, at least a week, if not more, to pass a bill, and then it will take the IRS even longer to get that out. So that's more, in the past, it's usually taken about 2 months to get those checks out. But that's something, about $500 billion of stimulus is what Secretary Stephen Mnuchin has said to expect there. And this is part of a larger package that could be around $1 trillion. And that's a huge number. Even just thinking back to the tax cut we had a couple of years ago, that was a $1.5 trillion tax cut over 10 years. This is $1 trillion injected into the economy in just 1 year.
That said, obviously, Laura, there is panic. People want to know that they're going to see some relief now. Is there anything, I know we're talking about Washington here, but is there anything that they can do to speed up the timeline?
Well, there are some things they can do. One, having some bipartisan support right now does help grease those wheels. I've been talking to a lot of experts who have worked at the IRS who have said, they maybe can do some things with direct deposit and get those numbers down to about a month to get checks out. But it still will be more of a matter of a couple weeks to a couple months versus a matter of days from now. And that's a real concern. In Ohio, we saw the number of unemployment claims jump just from this week to last week. And there's a lot of concern that people, especially as they're not going out. Most people across the country are stuck at home and aren't going out to eat. That a lot of workers are, faced with, choices about how to pay for food or pay for rent this month.
So let's talk about what tomorrow looks like on Capitol Hill. Tomorrow looks like at the White House, when we don't even know what the next hour looks like around the world.
Yes, it's very uncertain and very fast moving. We're still waiting for the Senate to vote on and pass the House bill that does things like expand paid medical and sick leave, provides some more funding for unemployment insurance, gives money state money to expand Medicaid and Medicare. That is still under discussion. They're figuring out the final kinks of that. We expect that to move closely. If not tonight, it will move tomorrow, and then they will dig in on this issue with the checks and how to get that structured. And that will be a fight. You see some division already within Republicans. Senator Lindsey Graham has said he doesn't like the idea. He's more of the payroll tax cut. So they're trying to get that moving as quickly as possible so they can get some of that money injected into the economy as quickly as Congress can.
Okay, Laura Davison for us in Washington. Laura, thank you for that update. Meantime, I want to bring in Tal Cohen from the NASDAQ, the head of U.S. markets at the NASDAQ, joining me now on the phone. Tal, people are watching their 401ks disappear right now. What can you tell them?
So certainly the last 2 weeks and maybe the last month has been unprecedented in terms of the type of volatility and activity we've seen in the market. And it's been historic, where we've seen for the first time since 1930 a 9% plus up day, a 9% plus down day happen back to back. And you see just yesterday we were down beyond 10%. Now we're back up over 6%. So this type of nervousness in the market is understandable. But what I would share is the direction of the market is one thing. The well-functioning part of the market is something separate. And the markets are available for investors. They're resilient, and they'll provide certainty and hopefully improve investor confidence as we see this crisis unfold.
Talk to me about volume. How much trading is happening, and what does that signal about sentiment?
Just to give you a sense of what we've been seeing over the last month and maybe over the last few weeks, we've seen our 10 top days in terms of records, in terms of activity on our options market in the past month. And that would have been twice the previous record that we saw last year. In equities, it's much the same story, where we've seen twice the records and activity levels we've seen in 2009 or historically. So the markets are extremely active. We see participation at all levels of the market. And I think this is going to be a theme for the next couple of weeks as the virus continues to unfold.
we focus on tech here normally. So talk to us about Apple, Facebook, Alphabet, Amazon. These are companies that slid big time yesterday. They recovered a little bit today, but certainly not in step with the rest of the market recovery. What are you seeing when it comes to tech names?
From a market perspective, we're still seeing a broad set of participants actively trading those names and buying and selling activity levels fairly high. And what we say, we take a step back. Based on time horizon, these things will work themselves out. It's still unclear what the severity and length of this downturn will be. And really, we need to take a step back and understand it's a health crisis first, and our ability to contain that crisis and flatten the curve will really then determine how severe this downturn is for companies like Apple and Facebook and others.
So look, what does tomorrow look like for you? Do you watch what's happening in Asia? Do you watch what's happening in Europe?
We do. We pay a lot of attention to the foreign markets, and there's a circadian rhythm to trading. So as it passes through Asia, into Europe and into the U.S., we're watching what the other markets are doing. We're watching for sentiment. We're very closely aligned with the futures market, for instance, because the futures markets actually will trigger the volatility guards in the equity and option markets. So those guardrails in the equity and option markets are tied to other markets and indices off of those other markets. So we spend a lot of time looking at those other markets, paying attention, and then proactively preparing for the day ahead.
So let's talk a little bit about what's happening in Washington. What kind of action would you like to see, or do you think investors would like to see to inspire confidence?
Well, the thing that we've seen talked about recently and would support, we need to continue to make sure that the markets are available. We need to make sure that the capital markets are well functioning and available for investors. Because if they're not, I think that will add to the uncertainty, it will add to the fragility of the market, and will not support investor confidence. So we need to make sure that people understand that the markets are well functioning, they're there for investors. And for example, investors may have liquidity needs. And to the extent that the markets aren't accessible, they can't get into those liquidity needs. They can't meet their liquidity needs. Issuers, for instance, who are looking to raise capital, what if we have a biotech company that's working on a cure related to the virus, and they're looking to capitalize around some R&D work? It's really important that these markets are open for business for both issuers and investors. I think that would lead to confidence in the markets.
Desperate times now, Tal. Shortening of trading hours. What is your view on that?
Shortening of the trading day is probably the least bad option from a menu of very bad options. We think continuing to make sure that the markets are open as they are today is what we should be pursuing. We certainly would not be in favor of closing the market. We certainly wouldn't be in favor of shortening the trading day. I think that might just increase the intensity of the trading day if we just shortened it. So we're unclear what we would solve with that. We would like to talk to policymakers. We would like to talk to other exchanges and make sure we're well coordinated to understand what problems we're trying to solve, whether it's shortening the trading day or changing some aspects of the way that the day shapes up. And I would mention this to you. We do have volatility guards in place that, as an industry, we've worked on over the last 4 or 5 years. So maybe the conversation needs to shift from, do we think that these new guardrails are working? Are they working appropriately? Do we need to look at those and optimize those rather than take some of the measures you just discussed?
All right. Tal Cohen, head of markets at the NASDAQ. We'll see what happens tomorrow. Another day, another trade. Thank you very, very much. Meantime, we've got some breaking news to tell you about. SoftBank is backing away from a planned bailout plan for WeWork. Of course, as we know, WeWork has been the subject of multiple regulatory probes by the SEC, by the Justice Department. SoftBank now, this report coming from Dow Jones, backing away from part of its WeWork bailout plan. We're going to continue to monitor that story, but obviously a lot of organizations, even well-capitalized ones out there, feeling the impact of this market uproar. We'll be back with more of our Bloomberg Special Markets coverage after this quick break. This is Bloomberg. Welcome back to our Bloomberg special market coverage. Now to Amazon making unprecedented moves to get customers the staples they need, whether it is toilet paper or bleach wipes or hand sanitizer. There have been a lot of delays in customers getting what they feel they need. I want to bring in Bloomberg's Matt Day, who covers Amazon and joins us now on the phone from Seattle. So Amazon, Matt, has come up with a new plan to stock the essentials and not the non-essentials, like television sets and the like. Tell us exactly how this plan is going to work.
So they sent a letter to merchants and big vendors this morning saying that, basically if you're not selling one of those hot categories of, kind of virus essentials, they're not accepting any more inbound from you. It's kind of an effort to prioritize, shipping those wipes and all the other hand sanitizer-like products we've been demanding to customers, just given all the demand they've seen the last week or two.
So does that mean if I need toilet paper, if I need hand sanitizer, that I can get it and I can get it quickly?
Well, certainly not yet. If you do a search, just did one a couple minutes ago for paper towels, and there's still not a whole lot of inventory there. Like a lot of retailers, Amazon's been struggling to keep these kind of staples in stock. This seems to be a plan to try to fix some of that, but again, a lot of that's going to depend on the supply chain and Amazon and everybody else trying to sell the same stuff beholden to right now.
Meantime, Amazon announced yesterday that they're hiring 100,000 new workers to help keep things running during this coronavirus outbreak. I understand about 5 workers have taken ill in Spain and Italy in their warehouses. We do, of course, know about that case at headquarters in Seattle, an Amazon employee getting sick there. Where are these workers going to go? What are the safety precautions going to be?
So Amazon says they've ramped up their cleaning protocols sort of worldwide in their fulfillment centers. They're not having to congregate in enter and exit lines anymore. They clean up the break room, but we really don't know the state of those workers. They haven't said a whole lot of them confirming the cases when we asked, and it's not exactly clear sort of what steps they would take if there is an outbreak in a facility that goes beyond just 1 or 2 workers. It's definitely an open question as to how they'd treat that. Because as they've made clear since the beginning of this, they're trying to keep their network open as best they can and keep speeding things to customers.
So if you can, give us a snapshot of what Amazon fulfillment centers look like around the world. We know that there are many. They're across the United States, which is how they get us our stuff so fast. But, what does this look like worldwide? And how much of Amazon fulfillment has actually been disrupted and how much of it is actually running as it normally does?
Hard to get a great read. I mean, people who haven't been in one of these places should know, it's a giant, sprawling, up to 1 million square feet or more facility. People aren't typically on top of each other. They can be, pretty sterile environments. Frankly, you're sort of sitting at a station, moving items from one side of your body to another over and over again for a 10-hour shift. And so it's not exactly, seen by the outside observers as kind of a hotbed for transmission among people. But that said, there's still places where people congregate. These facilities employ thousands of people, so I think it's something worth watching. And Amazon certainly is trying to make sure that they don't get any issues in there.
All right, Bloomberg's Matt Day for us in Seattle. Matt, thank you so much for that update. Coming up, we're going to talk about testing, coronavirus testing. Alphabet's Verily had offered to screen patients across California, but they ran out of tests pretty fast. We'll have more on that coming up. This is Bloomberg. Welcome back to our Bloomberg Television special markets coverage. Alphabet's Verily started offering coronavirus tests yesterday, but it turns out they only ran enough tests for about 20 people and ran out of tests about 9 a.m. on the first day of testing. To talk to us about what happened, I want to bring in our Alphabet reporter, Mark Bergen, who joins me now. Mark, 20 tests? What happened?
We don't have a great deal of knowledge about what happened. That's from our reporting, that 20 number. The company has not confirmed that. From our reporting, it suggests that they're aiming to do about twice that today on their second day of tests. I think what happened in a sense is it does seem like this got rolled out very quickly. If you recall, the president made a statement on Friday in a press conference saying that Google was preparing this nationwide screening. It turns out it was Verily, which is a Google sibling company, and it's limited to 2 counties in the Bay Area. And they're calling this a pilot rather certainly than a nationwide program.
Mark, you had folks yesterday who were desperate to get tested, today who are desperate to get tested and cannot get tests. Do we know how quickly they can ramp this up? And is this really a snapshot of what's happening across the country and why folks out there just can't get tested if they want to.
Yeah, my sense is they're working with the government, they're working with state officials, certainly there are private companies involved. The Verily test, they describe this as a risk test. So they're looking for high risk asymptomatic individuals. So if you go through the screening process on the website and say that you have the typical symptoms of coronavirus, so fever and cough, you're actually then directed to a medical professional. But if you are, say, a pregnant woman, or you've been traveling to infected countries like China and Iran recently, then you can sign up for this testing. Clearly, there's a backlog. There are a lot of people, but this is, I think that this is something that Verily has been doing for years. Their sort of bread and butter has been big data analytics. They're not necessarily a health provider, nor have they done this sort of testing. That they have this baseline project where they've been doing this around genetic testing. But as far as testing for something like the coronavirus and this novel pathogen, this is something where it's new to them as well.
Let's talk a little bit about the other things that Alphabet has been doing in the midst of this coronavirus outbreak. Google has taken sort of an unprecedented approach to the way they handle misinformation on the platform, prioritizing mainstream news sources, where for so many years they've said, well, the algorithm can do it all. How is that working?
From what little we've seen, it's actually working. Take a look at from a couple of years ago, where you had this influx of anti-vaccination misinformation spreading on YouTube and certainly on search. They've made a lot more progress on that. I think two things. One, they're facing a lot more scrutiny from public, from their own employees, from regulators. Google is also, as a company, has shifted in the past few years to focus on health. They have this new division just called Health. They've hired, biotech, medical professionals, and experts from pharmaceutical industry. It's unclear sort of what their business is in that, and it's something combined with their cloud business. But they're doing this big push around healthcare. The coronavirus is actually sort of first test of this system to see if they're delivering accurate information around search, to see what they're planning to do broadly around health. One thing you've seen, if you just go to google.com, they have this little World Health Organization, the 5 tips for how you can fight the spread of coronavirus.
All right, well, we'll see if this leads to a longer-term change in strategy. Bloomberg's Mark Bergen, who covers Alphabet for us, thanks so much for that update. Mark, coming up, we're going to check back in on the market, watching these historic swings. We'll be right back. This is Bloomberg. Welcome back to our special markets coverage on Bloomberg Television. We're going to check back in on these historic swings that we have been seeing in the markets, rebounding after a bloody slide yesterday. I want to bring in Nizar Tarhouni, PitchBook Director of Research. And Nizar, thank you. You've been putting out research through all of this. What's your latest take on the volatility and how long this keeps up?
Yeah, I think in general, nobody really knows how long it's going to keep up. I think the essence here of what we're seeing in the markets is obviously health related, and it's a little bit detached from what we're seeing in consumer and economic behavior. And so I think for us, we look at as soon as the healthcare crisis gets taken care of, or at least starts to materially get better, then I think you start to get a better sense of what the economic impacts might be, what we might expect in terms of cash flow projections and revenue projections. But I think for now, everyone's focused on that first health piece. And if that doesn't get taken care of, then I don't think anybody really has a sense of what's going to happen economically and how bad that impact is, whether we're looking at public equities, credit markets, or what we see and cover at PitchBook and private equity and venture.
Right. So given the uncertainty across the board, what is your advice?
Across the board, I think we don't want people to panic, and we don't want people to think that any broad economic contraction means that businesses can't continue to function and that we're going to see, massive layoffs and bankruptcies, et cetera. I think for us, what we think about is, as an investment community, whether you're investing in high yield debt or investment grade credit, whether you're investing in equities or what our clients do in private equity and ventures, you want to find good businesses with good cash flow profiles, with strong balance sheets that can withstand some sort of shocks. And at the end of the day, you want to find a place where you can get in at attractive entry points. I think what we've seen for the last consecutive years has been valuations across any asset class you look at have been elevated. I think a lot of focus is on public equities right now, but you have to have a peak to come down from, which is why equities are falling that far and that fast. But credit spreads have been incredibly tight up until recently, and private equity valuations have been getting done, at 11, 12 times earnings or 12 times EBITDA. And so I think for us, it's a lot more attractive opportunities are going to come in if we find good businesses to invest in. And I think that's all that any investor is really looking at. And I think if you look at any, institutional investor, that's the package that they're looking for.
How is this going to impact the deals landscape? Are we going to see M&A because companies just can't stay afloat, or possibly because it just makes strategic sense right now?
Yeah. So I think we see a couple of things there. I think we look at private equity and M&A traditionally tend to be fairly GDP linked. And so as we think about, we're getting ready to see a consumer-driven demand shock in the economy, which will then force businesses to really think about what are the expenses they're actually going to go out and spend, and what are procurement teams actually willing to approve in terms of, vendors and taking a look at the different cost profiles that businesses have. And so I think as we see that and GDP probably starts to decline as we move forward over the next couple of quarters, I think what you will see is a pause in transaction activity. I think the other thing too, as we look at private equity specifically, there's a massive debt portion that comes with that. And so, we look at what's happened in high yield markets and leverage loans over the past couple of weeks. Those are securities that can be pretty intuitive and pretty connected and correlated with what we see in the debt pricing that we see in private equity. And as those markets start to tighten up, I think you're going to see a lot of adjustments that need to be made with private equity LBOs that come to market with a lot more equity that goes into those transactions. So what that means is return profiles will probably shrink. And as a result, underwriting gets a lot tighter. And that means a lot more scrutiny on transactions. And so to answer your question, with all that in mind, I think we see transaction flow actually start to drop. From a strategic M&A perspective, yeah, go for it.
Sorry, what's your view on the private markets and, startups, for example, smaller tech companies? We've been told by venture capitalists here in the Bay Area that companies need to prepare for the worst, shore up their balance sheet, maybe pause on hiring, get their expenses under control. How do you monitor what's happening, in private, essentially?
Yeah, I mean, you're looking at a world where valuations have effectively doubled across the entire early stage and late stage venture market over the last 4 to 5 years. And you're looking at a world where, the time between rounds have shrunk and the valuation step ups on a pre-money basis across the entire venture market has increased, grown 50 to 100% in certain cases over the last few years as well. So I think what investors are trying to tell portfolio companies is to be smart. They don't want them burning cash the level that they've been burning. And I think the mantra of using capital as a comparative and competitive advantage in the market is going to die down over the last few quarters. And companies need to be a lot more efficient with the capital that they have. Now, as we talked about capital expenditures at the higher level with companies, a lot of venture-backed businesses are selling into broader enterprise businesses. And so what that means is that if cost cuts start to really impact what's going on in VC-backed companies that are smaller and don't have the cash flow profile to really withstand that, then I think VCs want their portfolio companies to be a lot more safe and to be a lot more smart with the way they pull down capital. And so I think deals will still get done. I think you'll see less deals. And I think at the same time, you're going to see round sizes shrink and you're going to see the time between rounds really extend. So I think with that, VCs are trying to be a lot more smart about what's going on today, using the great financial crisis as a good proxy and making sure that their businesses can be healthy and that they can preserve capital for their other investors and their limited partners.
Since you brought up those two dreaded words, financial crisis, I've heard so many people say this is not the financial crisis. The banks are well capitalized. We're in a much better position than we were in 2008. But the reality is nobody really knows how this is going to turn out. How do we know for sure that this isn't going to be the financial crisis or worse than the financial crisis?
Yeah, so I think the main difference for us is we look at liquidity. And so I think that you had a lot of investors that were taken out during the great financial crisis. I think you had a lot of investors that were in terrible assets, whether mortgage-backed securities or anything that went to zero. And that really changed the dynamic of what the banks could do. And obviously you saw the banks go under. I think today we see, especially in private markets, a market that's more well-capitalized than we've ever seen. We've got $2.4 trillion in dry powder sitting in private capital vehicles on a global basis. You've got $192 billion just in venture funds alone and 1.3 trillion sitting in private equity funds. So as a whole, I think the market has a lot more capital to ensure their portfolio companies can survive. On the banking side, while private equity and venture lenders are really different than what we're seeing at big, large blue chip banks, I think a lot more liquidity is being pumped into the market and the banks are going to be able to lend. I think what the Fed has done is really just ensure that banks can ensure that there's a steady flow of lending and credit into households and businesses. But I think what we see on the private side is that there's a lot of capital on the sidelines, and that might shrink return profiles as that capital has to be used for different things than new transactions. But we have the capital to preserve and alleviate pressure, I think, better than any time in history.
All right. Well, thanks so much for all that detailed analysis. Nizar Tarhuni, PitchBook Director of Research, thank you so much for stopping by today to weigh in. We'll bring you more on Bloomberg Television coming up. Don't miss it. This is Bloomberg. We're going to zoom in now to the global supply chain and what that looks like as the coronavirus wreaks havoc around the world. I want to bring in Bindia Vakil, the founder and CEO of Resilink, a company that provides supply chain data and helps companies manage their risk. Bindia, first of all, give us the lay of the land. What do supply chains look like right now?
First of all, thank you for having me. It's a pleasure to be here. The global supply chain right now is disrupted. We are seeing disruptions across the board from the demand side all the way to people, labor shortages, as well as raw material shortages, all the way to the delivery side. Companies cannot deliver to customers because while they or their supply chain might be fine, their customers might not be. So it's a very tough time for supply chains, suppliers, companies, all together, and we are not seeing this top off yet. So there's still some more that we're expecting in the next few weeks and months.
Are you seeing any differences in regional trends, whether it's China, where obviously they've been going through this for several months now, but sort of coming out of it, versus the US, versus Europe?
Definitely. In China, we see obviously the cases have tapered off, but largely that is because of the lockdowns that have been implemented. It's not as though the virus has been defeated. So it will be interesting over the next few weeks as China starts to resume operations, bring workers back into public places to see how will we see a second wave of transmission there. Because if we do see that, then we will expect to see continued disruptions over the next few months across the world and certainly in China. And China is a huge hub for the high-tech industry and many others, but certainly the high-tech industry is heavily reliant on China and parts of Asia. But in Europe, for example, what we are very concerned about right now is life science pharma and the impact there. Not only are they consumers of the life science pharma and the drugs and products that come from there for the surge in demand they are seeing from the patients that are admitted right now, but they are also huge exporters of key drugs that the United States needs. And so we're very concerned about the supply of essential drugs coming into the US for the surge that we're expecting here.
So talk to us about what that means then for the consumer, for patients, for people who need these drugs. You're telling companies to prepare for a 6-month-long disruption to the global supply chain. What does that mean for consumers? What does that mean for us?
So as consumers, what is really important right now is to make sure that we don't get sick. And the reason for that, and I think governments and local administrations are making best efforts to do that, is because we don't want to end up in the hospital needing drugs that we simply may not have enough of, or because we're not replenishing fast enough. What happens in pharmaceutical industries is we have quite a lot of finished goods inventory. So for the next few weeks, we are actually quite protected. But as the demand surges and our speed of replenishing those the used up inventory is not fast enough, therefore, over the next week or months, we should start to see some real shortages. Maybe some patients who need elective or preventable care might be denied medicines, and then only those who have essential life-saving or critical treatment needs might be accepted.
All right, Bindia Vakil, CEO of Resilink. Bindia, thanks so much for giving us that global view. Really appreciate it. I want to turn now to another story and how China is using drones to fight the coronavirus, to monitor quarantines, for example, to keep the outbreak at bay. Joining us right now is Kellen Ta, the Deputy General Manager of Shenzhen Smart Drone, a company that is currently working with the Chinese government. Kellen, thank you so much for joining us. First of all, tell us exactly how these drones work.
Basically, thank you for inviting me. So first of all, and then basically, the drone is actually working through its program. So basically, after you give it program, and then you will just follow its instructions and do flights autonomously. And then our company produces VTOL drone, like vertical takeoff and landing. So basically, it can take off anywhere, like in a small room, and then transit to like fixed wing mode, and then land it anywhere. So it's very flexible. So basically, that's how it works in terms of that. And then obviously, to fight with coronavirus, and then to help the government to do the quarantine, and then we actually contribute quite a lot in terms of various aspects, which I can detail describe in later terms. Yeah.
Right. So tell us a little bit about what these drones are capable of and how they can help.
Okay. So firstly, we can be equipped with optical zoom camera, which it can identify people congregation more efficiently. So especially in a large city area. So for example, usually the government, they don't have enough human resources to cover the ground. So basically they choose to use the drone technology, and with the VTOL fixed wing technology, it's easier to deploy and take off, and then monitor the major roads and the public spaces very quickly. And then if they spot any sort of congregation of people, for so many people getting around with each other, then they can alert the staff on the ground, and then they can take actions, or they take off measures to inform the public that not to be congregated or getting together. So this is one aspect, and then the other is that the drone can use the loudspeaker to replace the using of normally driving police cars around us, and then because the drone can fly basically more efficiently to everywhere, so it can carry the loudspeaker to broadcast the knowledge and the guidance for people to follow, and then to keep the people noticing, and then they should wear a mask, or they should not be so close to each other. Then they have to be sort of socially distanced. So that's something that it can replace the traditional way of broadcasting the guidance. And then
what exactly have your orders been from the Chinese government, and are these drones in operation in other countries?
Basically, since the outbreak, we have been really sort of contributing ourselves, not only the order, but we also, help the government, or we also work with the government in terms of, helping them to, more efficiently do the quarantine and control of the people flow. So basically, it has been very successful since so far, and we still help them, and sometimes we do service for them as well. They already bought the drones, and then we have our pilots to help them to fly the drones and operate the drones, and then to give more certified results. After a certain period of time, after we adjust and improve our methods.
Right. Yeah. All right. Well, fascinating to see how your technology is being used. Kellen Ta, Deputy General Manager of Shenzhen Smart Drone, thank you so much for joining us today. Coming up, we're going to be talking about Airbnb, talking with a top executive as the company faces major disruption to the travel industry. That's next. This is Bloomberg. Now to Airbnb, a company that has had to dramatically shift its strategy, evolve its policies as the coronavirus outbreaks disrupts their business. Joining us now, Chris Lehane, Airbnb's Senior Vice President for Global Policy. Chris, thank you so much for joining us. Of course, you had a lot of unhappy customers out there last week. I know you've been evolving your policies. You've made some changes. You've been allowing refunds, allowing cancellations. Talk to us about the policy as it stands right now. If you want to cancel a trip anywhere in the world because of this, how is Airbnb responding?
That's exactly right, which is we now have a global policy in place that allows a guest to be able to cancel regardless of where they're traveling. We put this in place based on guidance and counsel that we've been receiving from governments, from healthcare experts, with really one point or one focus in mind, and that is, what can we do to make sure that we're doing everything in our power to prioritize health and safety? Obviously, this is a global pandemic, very sensitive to people being put in a position where they may feel like they have to travel, and wanted to do everything that we could to make sure that guests were not being put in that position. And so we really anchored our decision making in what is in the best health interest of the communities we're in, our hosts, our guests, and really what we can do as a responsible platform given what's going on in the world right now.
And look, I know Airbnb is in a unique position. This is a two-sided marketplace. It's not just about the visitors, but it is about the hosts and money that they also depend on. But are you saying that anyone who cancels a trip, for example, will not only get their stay refunded, but also their Airbnb fees?
That's exactly right. We're refunding 100% of our fees, and the policy really does apply across the board for anyone who is out there looking to cancel a reservation. By the way, I should really emphasize that the vast, vast majority of the Airbnb hosts were already doing this on their own outside of their pre-existing cancellation policies. So our hosts are already generally doing this. We wanted to make sure that we did it, including all of our fees, and again, really prioritizing the overall health and safety of the communities that we operate in. That's really how we have thought about this.
Right.
As you referenced, right, it is a two-sided marketplace, and we do know that has a real impact on our hosts, and we've made really clear in any number of ways that we're exploring a variety of ideas and options so that we can be in a position to help those hosts as we go forward through this. Airbnb is ultimately a two-sided marketplace where we're trying to economically empower people. But obviously, there's huge things going on in the world. And when we thought about the hierarchy of needs, first and foremost was really making sure that we're doing what we could do to prioritize the health and safety issues.
So you sent a letter to U.S. policymakers today. You're asking Congress to work together on policy solutions that can help the travel industry through this. What exactly are you asking for? I mean, are you planning to give or hoping to be able to give financial assistance to your hosts directly?
Yeah, first and foremost, we are exploring a variety of ideas and ways that we can help provide support to our hosts as we go forward. We specifically wrote to Congress today in the context of the larger conversation about a relief package to help Americans all over the country. And want to give great credit to the leadership that we're seeing in Congress as they begin to think about it. Obviously, a lot of conversations about what type of support can be given to the larger travel and tourism sector. Airbnb is a little bit different in the sense that the vast majority of the economics that Airbnb generates around the world, but here in the US, actually go out to the hosts. And they're just everyday people. They make up to 97% of what they list their home for. We know that half of our hosts, over half, depend on the economics to meet their monthly needs. A quarter of them tell us that they would face an eviction or foreclosure. But look at, behind all the stats and figures, these are real people. 14% of our hosts in this country are teachers, educators. These are nurses out there actually on the front lines helping people right now. There are seniors who really are on fixed incomes and depend on this economics. So we're asking Congress as they go through this process to get out much needed support, that we actually think about these small working men and women out there who do depend on platforms like Airbnb to help make their ends meet. And we're really hopeful that as they go through this process, we can think about those folks and making sure that they get some support.
Chris, Chris, we've got 20 seconds left. Quickly,
Sure.
does this impact Airbnb's plans to go public this year? Yes, no?
Well, as you know, we're in a quiet period. I'm very limited in terms of what I can say. We've obviously put out guidance in the past indicating that 2020 year that we're going to go public,
Okay.
and I'll leave it at that.
All right. Chris Lehane, Airbnb, thanks so much. Stay with Bloomberg Television. We'll be back with more after this break.